Fantastic. Okay, so we're just on 12 just now, so I think people are kind of joining us at the moment. Thank you for everyone joining us. Just a bit of housekeeping to begin with. So obviously we're doing this is over a webinar, so it's a Zoom call. At the bottom of the screen, you'll see there's a Q&A function and also a chat box. So they're both pretty much the same sort of thing. If you have questions that you want to ask throughout the webinar, please ask them on the chat function. I'll take a wee note of them, and then I will I'll ask Sheila at the end. We've got roughly about half an hour to go through this this webinar, which is a bit of a kind of introduction to finances for people that are maybe non-finance managers, and we will have opportunities to follow up with people as well if there are any additional questions. So just want to say a huge thank to Sheila for running this webinar. Thank you so much. I think when we spoke before, we were speaking about the fact that sometimes finance is something that can be overwhelming for people. So it's been really nice to speak to you about a session which is just kind of doing the kind of basics almost in chunks and trying to make it as digestible as possible. So thank you, Sheila. I'll just ask you to maybe do a bit of an overview about who you are, your company, what you offer, before going into your session.
Sure, absolutely. Thanks very much indeed, Kieran. Yeah, hi everybody, and thanks for tuning in. I'm Sheila Fazal, and amongst a number of other things, I run a social enterprise accountancy firm, SIS. I'm really passionate about finance and figures, but I'm very conscious that a lot of people are not. And so my ongoing challenge is really to try and make finance fun, to make it playful, and actually to introduce everyone to a potential new friend. So you may have heard the expression cash is king, and there's a stark reality there really that regardless of your sales, of your profits, and basically the worth of your business, cash is the lifeblood, and if you don't have the cash, then you could indeed fail. Whereas if you do have cash, you are more likely to succeed and to thrive. So really the focus of today, therefore, really around cash flow. Also aware that you're all at maybe different stages of your understanding. So I do hope today that with the presentation that you'll either take away something new from this, or indeed it will just remind you of things that you already know. So what I've got a number of slides. I have been warned by all my fellow social enterprises not to do PowerPoint bullet points and give you death by PowerPoint. So what I've tried to do is to make them as visual as possible. So let me just share the slides with you now. Okay, so as I say, cash is king, that's my details, and as I say, it's really around the critical cash flow and forward planning. So what is it that, I'm just going to say, can I not go forward with this? So I don't know how, sorry guys, technology.
Yeah, that's fine, no problem. So if you go up and down with the keys.
So the cursor, all right, okay, gotcha, thank you, okay.
No problems.
So what is going to be covered today? So the key things I want to pick up on is financial information and why it's important to you, why you should be able to get access to it, and also understand what it means for you. Different types of financial information, because there's lots of stuff out there, just trying to unpick a little bit of that. As I said before, cash flow, actually looking at that, maybe giving you an example and sharing with you some practical tips for success. And then a session at the end, as Kieran was saying, on questions. So picking up on the first point on why what is financial information and why is it useful? Well, most of you probably will understand about the statutory accounts, the fact that statutory accounts have got to be done for your company every year. And as a result, if you don't get those in on time, you could actually be fined up to £3,000. So clearly a monetary incentive as well to get that information together and get that submitted to Companies House. The other need for it is funding applications. One thing that I was very conscious of during COVID was that I got a lot of contact from people saying, in order to be able to apply to the Third Sector Resilience Fund, I need to have some management accounts, I need to have some projections, can you help? So having that information available clearly also helps in aiding that funding application process, because if they ask for it, I've seen as well people rejected because they haven't actually put the basic stuff that they were wanting as part of the application process included within it. The other thing is for funders and investors. So if you've been lucky enough to get some funding, some funders will actually ask you, how have you spent the money? So that financial information will be able to help you explain to them how you've spent the money. And again, for investors like lenders, they may want information on a regular basis just to make sure that you're in a position to be able to continue to repay your loan. Other thing, of course, it's hugely important for is the pricing of your goods and services. Do you actually understand and know what your costs are, and do you have them all in one space? And if you do, you've got a much better understanding of how you're going to be pricing your goods and services. The other thing is decision making. Example I had quite recently, there was one of my clients had an opportunity to do a new project. The social impact was deemed to be quite significant. They got very excited about it, sat down and actually tried to work out what the costs would be and what levels of income there might be coming from it. And then, of course, realizing that it really was not going to make ends meet, they decided that this was not the time to be able to invest in that project. So clearly decision making and getting the figures will help you in that basis. And then finally, governance, you'll have a board. The board needs to make sure that they've got oversight over the organisation and how they're doing, and therefore to have some kind of financial information to provide to them is going to be helpful in their governance role. So moving on then to what types of financial information you actually have. Now, there's lots of things. This is where the accounting jargon is out there, and I'm afraid I'll try and cut through it. But at the end of the day, these are all the sorts of things you'll hear. Year-end accounts, let's start with those. So year-end accounts, the statutory accounts, remember, that's a snapshot. That's a point in time. And your year-end will normally be given to you by Companies House, and it'll be a year after you've been incorporated, unless you change that yourself. So if you're incorporated sometime in January, 31st of January will be your year-end. So that snapshot in time, that's where you'll hear the expressions turnover, hopefully profit, surplus, could be deficit, could be loss, assets, accruals and liabilities, and reserves as well. Now, all that terminology is actually deemed from generally accepted accounting principles. In order for accounts to be consistent and to be able to be comparable regardless of what business you're in, there are certain rules, formats you have to follow. And those guidelines are set out in accounting standards in FRS 105 if you're a very small micro entity, and if you're a charity it would be 102, and again you'd have the SORP. Now, I won't go into this in any more detail. I've thrown enough words and jargon at you just now. That's a whole different day's training, but it's fair to say that it's quite complex, but it's your accounting records. That's really, in summary, it's your accounting records that feed into those accounts, which create those accounts at the year end. Moving forward, there are projections. So projections are really just your estimate, best estimate, and what's going to happen in the future. Your accounts and your accounting records tend to be historical. That's looking at the past. Projections are looking at the future, what's going to happen in the future. Your cash flow is fundamental and works right the way through as the body of that organization, through the organization. And as a result, that's the key thing that we're going to be looking at today. Now, just before I go on and talk a bit more detail about the cash flow, something that I thought might be worth just mentioning is that at your year-end account, something that has now come a lot more into sort of discussion with accountants, and should be again part of a director's discussion as well, is that there's always been an assumption when you do your year-end accounts that you'll be a going concern. And what that means is that you will be in existence from a year after you've signed off your accounts. Now, how do you get comfortable about that? How is there some kind of evidence that that's going to be the case? And in order to get that evidence, you would be looking at your projections and you'd be looking at your cash flow. And so as a board of directors, you'd want to look and say, am I comfortable that my projections and that my cash flow are evidencing that I can survive a year from now? And if there's any doubt about that, then you would need to be putting some disclosures in your accounts. And that is something I certainly am expecting to see a lot more people putting in their accounts from now on, because COVID has just thrown such a challenge to so many people, and they don't actually know, will they be in existence? We don't know what this new normal is going to be like. So do expect to think about, do I want to put some more disclosures in my accounts? And if you have got an accountant's report, an independent examiner's report, or indeed are part of an audit, then expect that your auditors or your accountants are going to be asking you questions about that, and may in fact get you to put some wording in the accounts just to explain the uncertainty around it. The other thing to be thinking about is reserves and a reserves policy. Because good practice would be that from a reserves perspective, you should be aiming to have about 3 months of expenditure within your reserves. Now, clearly that's a lot easier for more established, well-functioning and well-established charities and businesses. And it may be something it's not actually possible, but certainly your reserves policy should be something you think about, and indeed as a board might want to consider actions that you might take in order to achieve those reserves. And in fact, you'll find at the end of COVID, probably the charities who did have more reserves are likely to be the ones who've been able to dip into those reserves during COVID and come out it, as relatively as unscathed as possible. So if we're talking about cash flow and we're wanting to think about cash flow, it can be quite daunting, as I know, to be sitting there looking at a blank spreadsheet. Quite intimidating. And in fact, it gets to the stage where probably either you'll put off doing it or you'll just, not ever get around to doing it. So what I do suggest is maybe think about your cash flow as if you were making a meal. So think about your cash flow as maybe your dinner. So before you make your dinner, what you might want to do is to think about, well, what are the ingredients that I might want to put into my dinner? And so you might list down those ingredients. So those ingredients might be the equivalent to your assumptions and to the information you need to put into your cash flow. So once you've done that, you then think about, well, how accessible is that? So again, the analogy of the dinner, have I got stuff in my store cupboard? Have I got things in my fridge? All easily accessible. There might be some stuff I might have to go to the supermarket for, a bit more effort that I might have to go to, or indeed there might be things I need to go to a specialist market for. So that's the sort of way of thinking about it and doing it. The other thing I would suggest is try not to do it on your own, do it with company. So if you're actually going to be starting off this cash flow process and having a think about what you need, if you can talk to your board, do it as part of a board meeting, or even as with your management team or your volunteers, so much easier than doing it on your own. And top tip from one of my colleagues is try and use some different font and try and use some color. So that is what I will show you some examples. So this is just an example. Normally what I would do as a part of a training course is to actually get everyone to work through this example and do it from scratch. But clearly with the time involved, we haven't got time. So this is a wee bit sort of, populated for you. But in here, what we're really doing is showing and listing all the incomings. What are all the things like you would have as your equivalent ingredients? What are all the things that would be coming into the business, and what are your outgoings? And the other thing that's really helpful from a costing point of view, if you can identify what are fixed costs, so what are the things that are going to be having to be paid for regardless of your levels of income. So things like rent, maybe some things like your software, all of that kind of stuff is going to happen regardless of whether you've got any business or not. Then you've got your variables, and your variables are things that will depend on your business, so that or certain events happening. So you can at least sort of divide them out in that way. So using that information, we then pull together, now here we are, this is a real quite horrendous slide, which I don't expect you to actually take any notice of the detail of, but what this is doing by putting colour, by making it into the different fonts, is trying hard to make it a bit friendlier to see rather than just a mass of figures on a screen. But this is the finished example. And if I can just give you a wee bit of a top tip as well, is on things like scenario testing, because what you'll find is that when you're making your assumptions, sometimes your assumptions might change, or you might want your assumptions to change. So for scenario testing, if you can set up your spreadsheet to make life easier for you, all the better. So in this case, for example, for the online training, there's an assumption that the costs are going to be £75 per person, that in the month of July, there's going to be 4 online events with 6 people for each of them. So that's you multiplying each of them out. Now, if you decide actually that, you know what, I'm not going to get 6 people for £75, I'm going to have to reduce the price, and then you change the 75, that'll automatically feed through into your spreadsheet that you don't have to recalculate it. But again, it means you might get more people at that lower price. So again, if you can change the number of people online, it feeds through. So little things like that to try and help you, and you can then play around a little bit with your spreadsheets and make it work for you when you're doing your assumptions. So on that one I looked at before, let's specifically drill down, and this piece here, closing bank balance, that is going to be your important piece. What is that closing bank balance, and what is that telling you? So the good thing is we've got an opening balance in the bank of the 2,630, really great. We've managed to get that part of the third sector resilience fund. We've got a little bit left in there. We're feeling really good about it. We're going to buy some equipment of £1,500 in July to help us to do our online training. We feel we're doing quite well, but suddenly by September, this big pink, I haven't put it in red, put it in pink. So this pink closing bank balance of minus 556 is the problem. Now, what you could do is you could probably go and you could get an overdraft if you phoned up the bank, spoke nicely, see what they could do you a deal for. As a director, you might say, look, do you know what, I might just loan the money into the account. But actually, there's other things you can do with your cash flow, and you can maybe think about other things you can do to try and control them. So in this specific example, let's have a think about the things we could do and what do we know about the way it's been pulled together. So for the workshops, the way that they are invoiced is that once the training's been held, we then raise an invoice and we've given payment terms of 45 days. The problem with that is that in July, if you're actually holding a course in July, you're not going to get paid even if they pay on time until September. So, you know, are there ways of invoicing earlier? Are there ways of actually changing your terms of payment? Now, obviously, that's still reliant on the fact that you're getting the payment made in time in the terms that you've set out. So if you say 7 days, that's going to bring it into that month. So there's still that question of chasing your debts, but if you've got a 45-day payment term, it's unlikely someone's going to pay you early. So that's a wee bit within your control. The other thing in this example is that there's an insurance renewal due in September. Now, if you want to pay the whole amount up front, £550, that's fantastic because you save £27 over the course of the year. However, you have got the option to pay it in months. And in this case, possibly this might be the thing to do. So you might have to pay a little bit extra, but by spreading it out across the year, it'll help you a little bit in managing your cash. The other thing in this example is that they've got a new premises, so that lease has gone up to £950 for that new premises because it's got a lot more space, another training room in it. And there were some legal fees as well that we were going to be charged for that, and that was going to be due, the invoice was going to be raised and payable in September. So again, what we've done is managed to go away, had a wee chat with the lawyers and say, look, a bit of problem here in trying to get the cash to you. Rather than just not pay it for the month, because we haven't got the money to do it, can we agree to do it in 2 months installments? They've agreed that because they've at least got half of the money this month, half the next month, and that again is working through. The other thing in this example is that we've had stock. Now, what we've always done is we've had lots of training courses. So as a result, we've just really got a quarterly standing order with the company that we buy all the materials from, and we just constantly buy that every quarter. So what we've done though, of course, is with COVID, there haven't been as many training courses. Let's have a look at the stock. Oh, actually, do you know what? We've got plenty of stock. We don't need to be buying any more at the moment. So as a result, we've stopped buying stock on a quarterly basis and are only buying it when we actually need it. So, surprise, surprise, reworking these figures and actually being able to do all of that, suddenly we're in a nice position where we've actually got £1,000 sitting in the bank in September. So there are some things that we can actually then do to try and help to manage that situation, manage that process. And in doing so, we're able to influence the cash flow. So just to recap on all of that, what you can do, what are the things that you can do to control your cash flow? When you think about your incoming cash, is it things like the timing of the invoices, when you raise them, how you collect the money? Can you do it through credit card, online? Can you do it at point of sale? Again, what are the terms of payment? I think in this day and age, 30 days used to be a standard term, but I'm certainly aware now with social enterprises, with cash being tight, 7 days is totally acceptable for a lot of people to do that. And then again, chasing debts, quite a lot of the time, it may be that if you use software, that if you're using software, you might find that there's already a function in there that highlights unpaid debts. You can then just chase them, get a process in place to be chasing the debts and making sure your money's actually coming in. And as I said before, if you do then need a short-term loan or an overdraft, you can at least plan for it and not be charged as a result. And it might be safe to say the other thing to mention as well is that when, instead of doing an Excel spreadsheet, a lot of the functionality now within your accounting software, if you use QuickBooks or if you use Sage or indeed Wave, any of those softwares, they actually also have a functionality for, most of them do anyway, for budgeting and for forecast review. So rather than using a spreadsheet, there might be a way of actually doing your budget, thinking about your cash flow and putting that into your software. And that again will produce good reports for you, and it's a way of collating the information in one space. So I forgot to mention that before, but worth mentioning that now. So outgoing cash, again, what are the sorts of things you can do to try and manage your outgoing cash? You can, as I said before, think about whether you can do monthly versus annual or quarterly. In fact, it could well be that it's better to do it annually if you can time it at a time when you know you're getting some money in, and therefore you are reducing the over cost. Again, if you look at your fixed costs, are there things that you can actually do to reduce your costs? Whether it's like rent, that could be two things. I'm not suggesting you clearly go out and negotiate with your landlord, although timing's right, it might be a way of doing it just now, but also you might want to change the premises that you're in. Then negotiating extended terms. Well, again, instead of all being paid in 1 month, can you extend those terms to another point in time? Sorry, I'm just trying to, I can't see the slides. I'm just trying to do that. And then stock management, that was the other thing that, again, is clearly people will quite often forget about that, because you'll have already purchased something, you've got some value in the business. Do you need to buy any more? And in fact, it may even be that you can sell some of your stock. So if you, for example, were a cafe and you'd bought a huge amount of coffee, it was all sitting there, you haven't been able to sell your coffee because of lockdown, so you've got a load of beans there. Actually, some people might be really happy to buy some beans from you to be able to take home. So be creative. You can have how you might be able to bring in some cash. And then as a last resort, not something that I would certainly recommend doing, but it can be done as something that's recognised as actually factoring your debt. So if you've got a lot of money tied up either in debtors, money that's due back to you from your clients and customers, if you've got a lot of stock, etc., then there are companies out there that will buy that from you. So they'll then be responsible for, you know, selling the stock and chasing the debts, and they'll give you money in exchange. Clearly it's quite severe, but it can, when times are really tight, it can be something that you can do. So those are the summary things there. Clearly using your initiative, being inventive is a good thing. But there's no doubt about it that you actually, by doing this process of cash flow, that's really going to give you confidence. Because one of the girls that I've been working with recently, we'd done this exercise together. She'd managed to get her cash flow together, and what she realized there quite clearly was that her costs, she could not pay for her rent just because of what was coming in. So that gave her the confidence to be able to go and have a negotiation with her landlord about repayment terms, and so they reworked the schedule. And so on that basis, you know, she was saying that having done those and understanding the figures, it gave her the confidence to have that negotiation and that conversation with her landlord, which, you know, she wouldn't have been able to do otherwise. So success, good news, and stories I love to hear. So in conclusion, what I would say is get yourself a cup of tea or coffee or a juice. Get yourself surrounded by friends or colleagues to have a bit of fun. Make sure that you think about the analogy with you're making your meal, get all your ingredients sort of listed out, and then finally try and make friends with your figures. Okay, so I think I've covered everything. Hopefully enough time for questions.
Thank you very much, Sheila. That's been it's been really useful for me. I think actually that's been the first time where I've fully understood what a going concern is within an organisation. So actually, it's a judgment that actually looking forward that you'll be there in the year ahead. You know, like having that kind of crystal clear concerns. Love the analogy of ingredients. Thanks. Marie, that's fantastic. So you can ask some questions, and most people, like I said, Sheila, from experience in webinars, I kind of keen on listening. But if you are, I know these maybe you want to ask questions, please do. I'll make a note of them. A few kind of like just comments and questions from me, Sheila, from someone that's run a social enterprise before, and quite a small one with a turnover of under £600,000 at one point. And we had hired someone because we didn't have the cash to be our finance officer, and it was someone that was super intelligent, super switched on, very good with numbers, but had no formal training in being a finance person, or, you know, and actually it took more time for me, another person, to try and come up to speed with the financial figures. So just what are your thoughts around about smaller organisations who have, like, you know, finance managers, maybe like me, that aren't financial people, or a finance officer that's very capable, in terms of maybe looking for services like yourself or like other people that may bring in perhaps maybe a finance director or equivalent for a day or so per week, about maybe what the benefits might be of that. It kind of seems obvious, I think, in some ways, but actually if you're someone that doesn't have the full kind of financial knowledge, maybe not.
Yeah. And I suppose for me, you know, one of the real values and my sort of ethos for setting up the social enterprise in the first place, to be honest, is around coaching and teaching.
Yeah.
Because for me, I just realize and understand that really, you know, the people who are running the business are the people who are best placed to understand what the actual figures are. They just don't know it. And so it's therefore what coaching and teaching can they get to enable them to actually understand the figures. So I've seen it before, especially sort of in the charitable sector, where you get, for example, somebody doing a funding application and pulling together, based on some discussion, they pull together a funding projections. And the funding application, you know, if it gets even to that stage of getting accepted, then suddenly the business have got projections they've got to work to, and not only do they not understand what they were, once they start understanding, they say, whoa, this is crazy, this isn't something that I ever signed up to. So for me, it's absolutely fundamental that the people running the business understand the figures. So I think there's that danger of having somebody like a finance director, if you then see them as the person who's going to do all the numbers, it really isn't going to help you in your business. So I would challenge that and make sure that if there was a finance director, then actually their job is not to do the numbers, but is to help you in your business understand the numbers. Because fundamentally, to be able to succeed, you need to know what the numbers are. And however scary and horrible that is, it's, you know, it's important.
That's an extremely good point, isn't it? And I think a lot of people with charitable structures or even CIC structures maybe think that there's a director there that's a treasurer or the person and that's their job. Actually, it's about oversight for them rather than actually the day-to-day and understanding the numbers. And if you, I guess the 2 points on that are that, you know, the person running the business needs to know the numbers, but also on the board, don't make assumptions that it's just the treasurer needs to know the numbers as well. You're all equally liable for that setup. Two questions came through just now, and I thought saw maybe some free software for someone that's kind of new to accounting. I don't know if there's particularly free software, but there certainly are easier to use software packages that are cheaper, aren't they?
Yep, and certainly I think there's quite a number of free softwares out there just to get a bit of used to and see how they work. Wave is one of them, and that it's American, so it's got quite a lot of sort of American terminology. So it might be different than what you're seeing when you're pulling accounts together at the end of the year. But certainly that's a good, easy one to use. But quite a lot of, in fact, all of them will have at least 30 days free trial period. So you'll at least have 30 days to try them for free just to see if you actually like them or not. And I think the other thing just to be mindful of on software though is that quite often there will be things that are free, but maybe the support, if anything goes wrong, is not going to be put in with that. You have to pay for it. Whereas if you've got other software, then although you might have to pay a bit for it, you're getting a huge amount of support and either using the best, you know, using it to its fullest way possible, or indeed if things go wrong with the data, to try and help it out. There's also a couple of things just to be mindful of. Royal Bank of Scotland have got, if you have got a business account with Royal Bank of Scotland, they give you free software called Free Agent, which is a very good one. And also there's a new bank, a new startup bank that has been set up called Metal. And that again is particularly good for new startup businesses, because you can get an account within a couple of days, I think, rather than sometimes with traditional banks, you have to go through quite a big process. So Metal Bank also, if you sign up with them, they give you free software, which is the Free Agent. So it is worth maybe thinking about that. Royal Bank of Scotland may have a cost attached to it just for having your bank account, but Metal as a new startup won't. So that might be worth looking into, might be suitable for people.
That's a really good tip, because as you say, setting up a bank account is quite laborious and it takes a while, doesn't it, to get them. Just to clarify with that, someone's asking, like in terms of the spelling, is it Metele or metal? How do you?
Gosh,
Is it as in heavy metal? Or I bet we can Google it and we'll maybe send
Google it and I can put it on.
Yeah.
I think it's MET.
Uh-huh.
I think it's METTAL or something.
All right. Okay. We'll find it
But
and we'll
I'll
send it
double
out.
check. Yeah, I'll double check because, yeah, double check and we can send that out to people if they're interested.
That's fantastic. There was also another, there's a question about, do you have suggested good reports to pull? Obviously, this whole kind of session has been on cash flow, and it's and in terms of a cash flow report, is obviously there's two there. In terms of accounting, you get accrual accounting and cash-based accounting. A lot of organisations will just be at a stage perhaps where they're just looking at cash, and actually, as you've hammered home, that's the most important thing, looking at your cash. So in terms of the reports, would you say your balance sheet, I guess, and then your cash flow?
So sorry, are you asking, are there any templates available for year-end accounting or for cash flow or?
I think the question, the way I'm picking this up is the cash flow. So it's about
cash flow.
Cash flow.
Okay. I think there's a huge number of templates. If you actually Google cash book templates, you'll probably find loads of different ones out there. And I think clearly what they're trying to do is they're trying to give you headings and they're trying to give you some of the basic calculations, so it adds things up and then it takes the income minus the expenditure away. So there are some basic templates that do that. So there isn't one that I would particularly, I mean, obviously got our own that we share with clients and so on, but actually there's lots, I think, available if you Google them that are just for free as well.
And I guess what's important from what you were saying in terms of assumptions, that was a really key kind of element in your cash flow forecast. So you can try and tweak assumptions of sales, but also within your presentation, you talked about fixed costs and variable costs.
Yep.
And obviously, as you made the difference that at the moment, we might want to make our payment terms 7 days to make sure we get that income coming in. But at this point in time, perhaps it's useful to think about who are all the people that owe us money and what's the nature of their business, what's the kind of business like, and maybe just think about, you know, actually having some conversations with them about actually, are you okay to pay us on time? And, you know, because for a lot of people, they've obviously kind of closed for furlough and they'll be looking at reopening again. And I can imagine they'll be thinking about basically, so is business going to be the same as when we kind of close down as well? So it's all of that. And we'd recommend getting someone support with that, like someone from yourself.
Yeah, and certainly I think this is the big problem that coming out of, in fact, going into, you know, the whole COVID situation overnight, everybody was having to basically redo, or not everybody, because clearly there were some people that were lucky that they could, you know, continue from home, but most people had to completely redo their forecasts and their budgets. And the thing is, if you've actually got it up to date and you understand what the assumptions are and set it up such that you can change your assumptions, then it's much easier to flex and change than to start from scratch if you don't have anything. So
there's one question which has come through as well, which I've kind of got a bit of view. We spoke about directors' loans, and I've seen directors' loans in some startup companies from my last job. And that can be quite common. There's a question round about, you mentioned that helping the cash balance by doing a director's loan, is that likely to harm the company's access to finance from other lenders? I think that's a broad question, isn't it? But it's not really in terms of.
It's a broad question, and I don't believe so, because I think it is generally accepted that at startup stage, quite often a director, for example, before they even start trading, they may want to put it, and they haven't got any money coming in from a funder. Then rather than taking a loan out, they'll just pay it out of their own pocket. So that's where the director's loan quite often will come from, is that it'll be expenses that they've incurred just before the business gets funded and gets started up. So, you know, clearly a lot of people don't bother even accounting for that, but I would encourage it, because I think a business should be fully sustainable, self-sustaining, and therefore, you know, money that the director have put in should then, you know, in effect eventually be returned to them once they're making enough funds. But that shouldn't stop. In fact, at some level, it just demonstrates to the funder that the individual believes in the business. Clearly, if that's the only money that's going in, there'll be a question around trading, because actually, if the only reason it's in existence is because the director's putting money in, you know, clearly there's a balance there. But I don't think it'll stop the funders necessarily from looking at it.
A really good point. You've got the term skin in the game, I guess, isn't it? Like, you know, you've actually put your money into it.
Yeah, I should caveat that though, that there are different rules for charities, because there shouldn't be, again, I'm talking more of a social enterprise sort of community interest company, or a small private limited company. Charities have different rules, and therefore it wouldn't be appropriate necessarily for charities in these situations.
Absolutely. But I guess one of the things to think about that I've seen before is, so if you put in a director's loan, you account for that, it would sometimes be a good indication for a lender that you've got skin in the game, but you would expect to have a conversation about how the lender would lend you money, and then who gets paid back first and who gets paid in the kind of terms of all that kind of stuff. But obviously we'll know that. I think we've got one more message that's come in. Oh, that's good. Just someone saying thank you. Well, that's good. That's good. If there's any more questions before we wrap up, actually, it's been a really good session, Sheila. I've learned a lot from it, and actually, I've not been on a finance section where it's been broken down this clearly before. So thank you very much. I would look forward to doing some more of these in the future. You said that if people have more questions, we can maybe answer them. But it's certainly, at the moment, it just takes the stress out of it. You realise yourself from running your own business, I'm sure, Sheila, that at this point of time, understanding the figures and just making sure that they don't overwhelm you is so important. So actually just having that support of someone like yourself is so useful.
Yep. And it's always that way about talking it through with someone. Don't always feel you have to do it on your own. If you've got somebody that can help and support you, then and actually sit down and make it a bit of fun and have it as a conversation, then that, I think you're much more in chance of succeeding.
Absolutely. I think that's such a good point. And actually, I was going to follow up with that. One point as well is doing that because you'll, feel that you have support, but then also whenever I've done it just on my own with a spreadsheet, you're going to make a small mistake. There's going to be something in there if somebody else hasn't looked over it, because you'll be, just one person going through a process. There's bound to be something on it. So get somebody else to look over it.
That's right.
Cool. Well, thank you so much. Thank you, Sheila. I've really enjoyed that, and thanks very much. We will. You've had your details on the presentation, but we'll email your details to all of the attendees as well, so they have them. But thank you so much.
Fantastic, lovely. Thanks very much.
Thanks. Bye bye.
And thanks everyone for joining. Bye now.